Hello, hello. Welcome to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. In today's video, we'll look at a few charts to make sure our supply squeeze thesis is still on track, but this video won't be quite as long as some of the other ones, because in large part, the Bitcoin network has been holding pat the last few days. So I want to show you what I have been observing, but we won't waste a lot of time rehashing old charts, because at this moment, there aren't a lot of new observations with the things we were already looking at. In my last video, I mentioned that my father had recently passed away, and the amount of support and encouraging comments I received from y'all was truly overwhelming, and I can't tell you how grateful I am to have such a kind community. So I just want you to know I've read all of your comments on Twitter and on YouTube, everyone who reached out to me privately as well. Thank you so much for that. I'm really encouraged and energized by you guys to continue making this content because it seems that you find value in it just as I enjoy making it for you. With that said, if you're enjoying these videos, please make sure to give it a thumbs up and subscribe to my channel. If you hit the bell icon next to the subscribe button, you'll be told about all of my future videos the minute they come out. Let's get into it. As we sit here on the morning of Thursday, September 30th, Bitcoin has not been doing very much the last few days. Price is continuing to hang out around 43,000, which is where it was on Sunday when I put out my last video. We're still hanging out underneath the 200-day moving average looking for support, but as long as we continue to hold this level here around 40,000, I'm feeling okay. We are still waiting to see some of these Fibonacci retracement levels get broken. We have some work to do before we even get back to these levels, but 54,000 and 57,000 remain the key levels for us to get through in a rally to confirm that we're moving back to the upside. So we still have quite a bit of work to do before we're out of the woods on the daily chart. If we flip over to the weekly chart, the damage does not look quite as bad. It just kind of looks like it's setting a higher low on the weekly here. And in fact, this still kind of looks like a bull flag. In trading, you got a bull flag, you got the run up, you got the pullback, and as long as it doesn't take out 50% of the move, you still have a valid setup for the move up. First target would be the highs. So this is a valid setup for traders. I'm not a trader, but there's enough people looking at these signals that it's important to keep them in mind. With all that said, let's dip into some of the on-chain stuff. The volume in the Perpetual futures market has remained pretty flat since the washouts earlier this month. I'm not seeing a lot of activity here. The volume is still on the higher side, but I don't know that we'll ever start seeing super low derivatives volume again. This market is very robust and there are new products coming out all the time. So high derivatives volume and a lot of speculative interest in that side of the market seems to be just the reality for Bitcoin. With that said, this is not alarming at this time. Also, another quick check-in on the funding rate. This determines how much bias and leverage is in the futures market. When you see a lot of bars stacking on one side over a period of days or weeks, you can think of it like continual tension being pulled in that bias direction. And if we get price action that goes opposite of that, we could quickly see liquidations and washouts. You can see here the buildup of positive leverage in the system leading up to September 7th when it was wiped out. The funding rate right now remains relatively flat. It's a little on the positive side, but right now I'm just not super concerned about what's going on in futures, but I want to keep the crowd updated because they've been very relevant for the last month or so. This chart here of network activity is probably the most bearish chart I could produce on chain right now. It's showing very low activity. So these two lines, we've looked at these before in previous videos, but just in case you don't recall, the blue line are active entities. These are individuals on chain, individual people, small firms, institutions, exchanges. They are all types of entities. The amount of them that are participating in transactions each day has been declining all summer after the rally in the spring. We hit a bounce here in July, and we've seen some growth in the amount of entities each day on chain. This orange line represents the count of transactions that these entities in blue are taking part in. They kind of follow each other, as you would expect, and we've seen both of them trending up here during the summer, but recently there's been a bit of a flat to slightly down tick as price has lost a bit of ground here in September. September is historically a bit of a bearish month for Bitcoin. I'm not raising any red flags about seeing this data like this, but I am going to continue watching it. It's just a fact that we will not have a sustained bull market rally of the kind we had in the beginning of the year without a higher level of base layer activity for Bitcoin. Layer 1 on-chain activity needs to be higher for us to actually realize another rally. We still have time for that to develop. It doesn't need to show up tomorrow, but what we don't need to see is for these values to reverse back down. Because as we've noted in previous videos, let me zoom out even more. As we've noted in previous videos, these two values, while they did crater, they've found support along a historical growth trend, and we'd like to see this maintained. This is important for the long-term growth trajectory of Bitcoin as a network and its adoption. Just something to keep in mind as we're going forward. We really would like to see more network activity. Here is our HODL Waves chart. So we've spent a couple of previous videos talking about the realized cap HODL Waves and how that showed value realized on chain each day. And this chart here, the HODL Waves, is its older brother. This is representing the total supply of all Bitcoin, including those that have been mined and never moved, including Satoshi's coins, everything. And what I'd like to show for you here is, let me take off some of these older groups. So what we're looking at now are only coins that are 3 months and younger. And let me go ahead and close out the data from before there was a market price. Here we are. So this is currently showing you only coins that are younger than 3 months. And for coins to stay only 3 months old, that means that every time they start to age, they get moved again. These are highly liquid coins. They're always changing hands. They don't get a chance to mature and settle, and they represent a high time preference. These are not the smart money. And what we can note about this level here is it is now at all-time lows. About 85% or so of the entire Bitcoin supply has not been moved in at least 3 months, since late June, basically. What this speaks to is a continual, gradual decline in the interest of long-term holders to move their coins at these prices. This is a trend and a dynamic that we have been talking about for 3 weeks on this channel in a number of different lenses and perspectives. But this is just another piece to add to that narrative that older hands, mature coins, smart money, long-term holders, all of those groups have found less and less reason to take action at these prices. They have weathered a considerable amount of FUD, negative news, uncertainty. They've weathered everything you could imagine in the year 2021, and the people who wanted to sell, by and large, have already been wrung out of this market. The only people left are the loyalists and the day traders. Here's our supply entities by size chart. We haven't looked at this in a few weeks, but I did just want to throw it in really quickly. Let me turn on the price so you can get an idea of where we are. Here's the spring rally. Here's the crash in May. Here's the summer, the bounce in July from the B-word conference. And here is the month of September, okay? Each of these lines represents a supply group, an entity group. Here are entities with less than 1 Bitcoin. Their supply is going straight frickin' up. Here are entities with 1 to 10 Bitcoin. Going straight up. 10 to 100 Bitcoin, growing dramatically in the month of September. 100 to 1,000 Bitcoin, still flat, but on a slight increase in September. And here are the whales. I have taken out exchanges, I've taken out Grayscale, I've taken out OTC desks, and a couple of the other ETFs. These are just whale entities, individuals, high net worth, and also some smaller firms and institutions. Their supply, while they did distribute a bit in September, they have seen a recent uptick in their balance, and they have not rolled over. Seeing a very slight distribution like this is not a concern. You can see they did the same thing here in August. This speaks generally, let me turn the price back on, as we are seeing price weakness, each of these groups is seeing an opportunity to either grow their holdings or to stand firm. This is very encouraging. These are the trends we want to see. So I do want to touch on one thing related to long-term holder supply. We talk about long-term holder supply a lot. Right now, it is at the highest level it has been in terms of total Bitcoin that it owns. As a percentage of the circulating supply, long-term holders have about 70% of all Bitcoin. And you can see that that is the highest level of the supply that they've owned since February of 2017, just before the blow-off top. This is the long-term holder, short-term holder ratio, and it's simply comparing the sizes of the two buckets to each other. When you see a high value on this line, it means that long-term holders take up an outsized portion of the supply compared to short-term hands. You can see right now, it's about a 4.2 to 1 ratio of long-term coins to short-term coins. This value sees its zenith in the depths of bear markets. These are points when long-term holders own the most amount of supply, and people with a high time preference are simply not in the market. can see the same thing happen over here in 2019 and during some of the chop in 2020. And yes, we are now seeing the same high value now, which would signify that maybe we're in a bearish period. But that's not invalidating of our current supply squeeze thesis. We know that there was a capitulation here. We know that old hands sold and miners sold all throughout this early part of the rally. We've gone over this in extensive detail on this channel. And when those things happen, the natural next step for a market is a bearish recovery period. That is when accumulation occurs. And that's what we've been talking about for weeks now. Heavy accumulation, right? That's what this line is showing. Look at this rate of growth of them taking back their coins. I will also note that they started from a shallower area than they did in the past. They kept more of their coins. They started from about a 2-to-1 ratio. That is unlike the previous markets. They started from a smaller baseline. But there is another part of this that I think we need to talk about. Let me turn this off and turn this on. This is the rate of change of the line we were just looking at. This is the 90-day rate of change of this line here that we were just looking at. When you see spikes upward, this is long-term holders growing quickly. When you see spikes downward, it's long-term holders distributing to short-term hands. After price rolls over, short-term holders begin getting squeezed out, long-term holders begin growing. Over here, we saw the same thing. The rally in 2020, as price began to break the previous highs, long-term holders began to distribute. And then here, the rate of change of this group reversed, and they began to grow their holdings. And this is the beginning of their accumulation phase. And now their rate of change is still well into the positive. Zero is down here. We're still well into the positive, but it has slowed a bit. And we can know that because if we look at the actual line of long-term holder supply, let's zoom in, we can see that it's flattened out a little bit up here. The rate of growth has begun to smooth just a bit here from how quickly it was growing down at the bottom. But what I find pretty interesting about this is that the rate of growth for long-term holders reached back up to the same kind of heights that it normally gets at in the recoveries from bull markets, but it started from an even lower place. It started from a lower rate of growth in part because long-term holders didn't give up as many of their coins. They didn't distribute as heavily as they have in previous markets. Not only did they not distribute as heavily, but their rate of growth was just as quick as previous markets. They started from a higher point and have now reached new highs on the same growth rate. That is an aggressive level of accumulation. And to me, it speaks to a further refinement and confidence development in the HODLer class for Bitcoin. They've been through this market a few times now. They've experienced 50% corrections and waves of negative news, and they know how to play it. They know how to play the cycles. And I think that this is just a further refinement of those investors, and it's something that I'm very encouraged by. I also want to point out this kind of looks like the 2013 fractal at the beginning here. You can see this was the distribution on the sell up to 2013, and then in this kind of 9-month period before the next bull market, there was a quick growth in long-term holders. Then they started to distribute, and there was a brief pause before the rest of the rally. Here's kind of a brief pause. I'm wondering if we get another distribution phase here as price goes up. We'll see. The main takeaway from this chart is that the growth rate of long-term holders is incredibly aggressive compared to previous markets, and they started from a place of having more supply than before. So they distributed less and have stacked just as aggressively. Key point. The last thing I want to touch on today relates to long-term holders as well. This is their spent output profit ratio. So this is the ratio of profit for every coin that is moved that belongs to a long-term holder on a given day. Obviously, when they move that coin, it immediately becomes a short-term coin and starts aging again. But when it does move, we get a brief glimpse into how much profit was taken. You can see as price is going up in bull markets, the profit ratio of long-term holders gets higher. When it gets into the depths of bears, they realize less and less profit until there are points when long-term holders are realizing losses in the aggregate. That's usually the depths of price, the depths of bear markets. Let me zoom in over here on the current market. So today, being September 30th, 155 days ago was April 28th, which is right here. Today's long-term holders bought at this moment right here, which was about 2 weeks after the absolute top here on April 13th when the Coinbase stock debut happened. So today's long-term holders, they bought right here. These people have weathered Tesla FUD, China banning industrial mining, climate and energy concerns related to Bitcoin, all this regulatory uncertainty, all these washouts and just sideways chop for months. They weathered all of that. And now they get to be part of the long-term holder group. And now long-term holders have adopted pretty much everyone from the spring rally. Anyone who still has a coin bought here is now a long-term holder. Only some of these people are in a loss now, whereas everybody else who's a long-term holder, everyone else who bought before this point in time right here, January 7th, all of the long-term holders that bought coin before then are in profit still. So if they were to sell, they would be selling at a gain. Well, long-term holders spent profit ratio recently touched 1.0, which means break even. That means that there are long-term holders spending their coins at a loss and at a break-even exit. The only way for that to happen, since we know that the vast majority of long-term holders are in profit, the only way for this chart to be showing a break-even profit ratio being spent is if the long-term holders that are moving coins are from right here. That's it. These are the only ones who have spent any of their coins recently. The impatient, newest members of the long-term holder group. These are not the smart money. These people might not have any idea what hodling is like. They may have never experienced a true market cycle. They may still not understand Bitcoin, but they bought it because Elon Musk was talking about it. These folks up here, some of them have grown impatient with waiting for price to come back up, even though they weathered all of this. A few of them have decided, you know what, I've had enough and I'm getting out. They began to realize coins, and some of them were realized at a slight loss. It means that they came from up here. But the key point for this is that if older hands were spending, if smart money were spending, this value would be way up here, because those people are in profit 4x, 6x, 10x. Those people are not moving their coins. The only ones who are the newest members of the long-term holder group, the most garden fresh rookies of all of the hodlers. So that's it. That was what I wanted to talk about today. I wanted to show you that long-term holders are continuing to stack at an aggressive rate, even though they didn't distribute as many coins as they usually do in the spring rally. I also want you to remember that though we are seeing a bit of loss being realized amongst the long-term holders, the only ones doing it are the newest members of the group. The OG hodlers have remained confident and their behavior is not changing. We still have some price weakness, but as long as we see accumulation amongst these various spend groups that we talk about, I still maintain my overall thesis of a supply squeeze. The technicals and the on-chain data do not currently align, and I believe that Bitcoin is undervalued relative to the perceived value of the current holders. And I think that speaks to continual development in Bitcoin as a network and as a monetary store of value. And it's the expanded acceptance of these facts by the participants in that market. Make sure you follow me on Twitter at TXMCTrades. I post a lot of observations and you'll find out when I'm putting out other content that isn't on my YouTube channel. Make sure you leave any feedback or questions in the comments. I read every one of them. With all that said, I hope you have a great afternoon. I'll probably put out another video over the weekend, so keep an eye out for that. In the meantime, take care of yourself, friends. Stay in a good mindset about Bitcoin. You're invested in the future of money. The rest of the world just has to wake up to it. We'll speak again soon, friends. Cheers.